Hello, I'm Brian Roten, Senior Reporter at Hotel News Now. I'm sitting here with Greg Osteen, Chief Development Officer in North America for Interstate Hotels and Resorts, and we're both here at the 2018 Lodging Conference. So Interstate has had quite a number of developments over the past year or so. So I think a good place to start is, can you just give us a bit of an overview of your company's current portfolio and a little bit about how you got there?
Sure, happy to. We are today about 500 hotels globally. With about 80% of those are in the U.S. or in North America, but mostly in the U.S. We're growing here and in the U.K. and in Russia. Most of our growth comes from really three sources. One is individual assets that we work with all types of owners, portfolios, and then acquisitions. We bought a couple of portfolios of management contracts this year, which you alluded to, that have helped us grow in large chunks, but we also have organic growth that we're focused on.
Well, let's talk a little bit about some of that organic growth.
Sure.
And what is your company's growth strategy through the remainder of 2018 going into 2019?
So the best way to sum it up is global domination.
Well, all right.
So internally we use that as sort of a rallying cry to not really limit ourselves into where we can go, right? We can't go everywhere. We've been in some markets before and then retreated because we didn't get the growth that we had hoped. But we do really want to grow organically, US, Canada, to some extent Latin America and the Caribbean for the right opportunities. Definitely in the UK, where we're already one of the largest, if not the largest third-party manager, and also in Russia. We have enough of a base established in those markets that we can build on and grow a lot organically.
Now, your company has talked about its interest recently in the upper upscale full service space. Can you share a little bit of what about that particular segment is attractive and what you hope to do there? Sure.
We've got a full range of properties, from some budget, a lot of select service, a lot of mid-scale, and we've been typically known as sort of a full service big box operator, 300 to 500 rooms, city center Marriotts, Westins. We really want to move more to the upper upscale space, as you said, and we have quite a few in the pipeline, some of which we can't really talk about yet because we're very close to signing. But that's an exciting space, right? The economy's very strong, that market is very strong. There's a lot of opportunity, we think, to grow into that space. And we've got quite a few, as I said, that we'll be adding soon. And success sort of breeds success. Once you get a few of a certain brand or a certain type, then others say, oh, okay, I didn't know you did that, or show me how you did that. Did you do it well enough that I'll give you a shot with mine? But until you get the first couple of them, it's a little bit harder sell, right? Because everyone wants to put you in a box. Everyone wants to say either, oh, well, I thought you only did select service, or I thought you only did big box, because it's just easier to compartmentalize all the competitors. But we really do have different segments that we focus in and that we want to grow.
So what brands in that upper upscale space are you looking to explore with?
Sure, we'd like to expand our presence with Le Méridien, with Intercontinental, with Westin, with JW Marriott, all really of the upper upscale. Some of the brands which we already have, and some which we'll be adding soon. But we really want to do more of those, right? Not to take away from the other sectors, but there's really a lot of opportunity there. The economy's good. There's a lot of those in our pipeline. There are a lot of customers that are moving back into that space, so we really want to focus in growing in that area.
So moving on to markets. What markets domestically are you exploring? Are you looking at expanding where you already have a presence? Are you looking going to new places, and internationally?
Yes to all the above. So if you look at where we are, if you just look at a map of, say, of the U.S., there's not as many down the middle of the country as there are on both ends. Now, there's also not as many markets and not as many people, but there are definitely some more opportunities for us in that sector. We obviously also want to go more where we already are, because there are definitely synergies when you can complex different or cluster hotels in a market and share some resources and ultimately save in some overhead expenses. So there's definitely a synergy to going where you already are. And we also want to go where our customers are, right? Where the third-party owners and other investors want to be, which are all the key markets that are growing, all the large markets: New York, San Francisco, LA, Nashville, obviously Austin, but everybody's going to those markets. And so sometimes being able to go into the lesser markets gives us a little bit of an advantage, because not everybody can afford to do that.
When you're looking at these different markets, obviously I'm sure it varies by brand and what segment you're looking at, but can you share a little bit about what the conditions in those markets are that make them attractive to you?
Sure, especially in the upper upscale where you have meeting space and larger boxes to fill. You want to have obviously diverse demand generators. You want to have good airlift. You look at somewhere like Nashville, before they built the convention center, it was more of a drive-to market. It had a good airport, but it had a lot of good reasons to be there, but it wasn't really on the circuit for conventions. They opened the new convention center, and the market has exploded ever since. So a market like that, like Austin, where there are reasons that conventions want to go there, and that people want to visit on the weekends, and that leisure travel wants to go there. So you've got to have room inventory, you've got to have good airlift, you've got to have good room inventory. And that was part of the problem with Nashville before, was they had hotel rooms, but they were all very tired, very old, and they couldn't really drive the rate. But now with a lot of new product, there's a tremendous amount of growth in the RevPAR there.
We touched on it a little bit earlier, but looking at the international markets, you said you already have quite a presence over in Europe, but I was hoping you could
Sure.
share a little bit more about your strategy overseas.
So we have a good footprint there, almost 80 properties, I believe, across Europe and some more in Russia. And we'd like to continue to grow on that with much the same strategy that we have in the US, which is, look, if we have a core of properties here, let's add some more around it so that we can cluster and share some of the synergies. It's harder. I wouldn't say very difficult, but it's definitely harder to grow there because 25 plus different countries, right, with different cultures and some have the same currency, some don't, but some have different labor pool and labor supply, different customs. So it's not like saying, hey, we've expanded out of Texas and we want to go to Oklahoma and Louisiana and New Mexico. It's, well, now I want to go into this country, and how are the laws different there? How are the labor customs different there? So each country is a little bit of a challenge in its own right, but we definitely want to grow in the places where we can expand without sort of not really taking a step backward, but we don't want to go into a market where we can't continue to grow on it, right? We don't want to do one-offs.
You spoke a little earlier about how Interstate in the past has acquired some other management companies. What is your company's appetite for further M&A?
We are always looking. We are always considering opportunities to buy other companies, other management contracts. For various reasons, people want to sell. Sometimes it's a family business that they've grown, and the next generation doesn't want to run it. Sometimes it's a group of investors that have said, okay, we're kind of done with this. We want to cash out and move on to something else. So we are always looking for opportunities to grow that way.
Widening the scope there, what do you think the appetite is for the industry overall in terms of further M&A? We've seen it in the REIT space, we've seen it in the brands, we've seen it in management companies, and what are your thoughts on consolidation as well? So,
good question. When you think about like the Pebblebrook acquisition of LaSalle and the time that took and how it went back and forth with Blackstone, and it had to be a very specific structure for that to work, right? It didn't work for just everybody, right? And it ended up being a really good fit for Pebblebrook. Would have been, I think, a good fit for Blackstone as well, but there was just a little bit of an extra synergy with the Pebblebrook because of similar assets and similar focus and ideas about what to do differently, right? But if you look at other opportunities, and we see all of them because we're based in DC, where most of the brands and the REITs are, it's going to get harder and harder because capital costs are increasing with interest costs going up, but also because RevPAR has been growing year after year, and it appears that it will continue to grow through this year and next year. Some people are saying 2020 will slow down, could be a recession, could be, who really knows, right? But you look at how much it's grown since the recession, and you have to ask yourself, okay, are we underwriting too strong? Because trees don't grow to the sky, right? At some point it has to taper off. So the only way that it makes sense for some of these mergers at the prices that they want there have to be two things. There have to be synergies where you have to save in costs, but you can't save your way to prosperity. At some point, you can only cut so much from the bone. So you have to also have a different way of, or a different vision of what the growth will be. And that's why as the price goes up, the bidders fall away, because they say, okay, well, there must be some secret sauce at this group that we don't have, because they just figured out a way to pay 5 or 10 or 15% more.
Well, Greg, thank you very much for joining me here today. And thank all of you for watching. Keep with Hotel News Now for further coverage of the 2018 Lodging Conference.